Good morning. Welcome to Market Wake Up. My name's Jordan. This is John, and I was about to say you're watching Market Wake Up. You're watching the one show that's going to get you up to date with everything that you need to know ahead of your trading day. We're talking hurricane today because obviously it's big in the news. I'm going to talk about I'm going to put a trader's cap on. We're going to talk about some opportunities that it may present, but also what's happening in and around the world. Without further ado, John, let's get into Market Wake Up. Good morning, John. There's a bit of sun coming through the window behind you there. Is it sunny?
Not really, but it's not raining, and it's not
positive.
So a little bit of positivity there. Plus, I opened the curtain today, I guess, so I can actually see outside.
Proud of you.
Thanks,
I'm
mate.
proud of you. But how are you doing?
Yeah, doing good. I've been looking into some interesting markets recently over this morning and a little bit of last night.
Which leads me to think it's not something you usually look into.
Oh, no, brand new to me. Have you ever heard of a cat bond?
No.
Which is a catastrophe bond. No, you haven't heard them?
No,
okay.
Not heard of cat bonds.
So this is something that's new to me. But it's basically a bond that is issued by insurance companies.
Yeah.
So I'll talk about it a little bit, but it's completely new to me, and I was just reading a sort of an article of what it is, why they've been using it. But apparently, it's the hedge fund's top performing strategy of 2023 going into 2024.
I mean, smart by insurance companies. They become the middleman. Hey, we're going to offer bonds. So if they go tits up, guess what? We'll just use their money to pay everyone's claims. Like that is so good. That is so good.
They offer higher yields on them to obviously attract investors to buy them. Wow. It's quite interesting to see because I was like, oh, okay, well, we've had the hurricane, obviously. Granted,
still going, no?
Yes. I think they're coming into the second part of it now, which is the sort of outer wall of it. Again, they've had the eye at the moment, and now they're going back into the sort of back.
Has it hit the East Coast? Has it gone through the East Coast yet?
Yeah, so it hit Tampa, didn't it? And around that area. Tampa, Florida, and I can't remember what the other one was called. Sarasota, I think it's called.
Yeah, but Tampa is west side.
Oh, so it would have hit west side then.
Yeah, so I don't think it's. I don't know if it's hit the east side. I know it's getting close.
Yeah,
but
so
it's got to go the whole way through Florida.
Yeah, so basically the whole of Florida just got.
Oh yeah, it's
just completely overrun by this hurricane. And I was watching it kind of unfold, and I was saying to you before we started the stream, they had like 90 something tornado warnings. There was, I think, 9 tornadoes that actually hit the ground, which actually has done quite a substantial amount of damage ahead of the hurricane. I'd say on a positive note, the hurricane was downgraded to a Cat 3 by the time it hit, which is obviously very much welcomed over the Cat 5 it was expected to be. So, yeah, very interesting situation going on over there. Obviously, how we relate this back to any kind of economic.
Leave that with me.
I'm going to leave
that with me.
I'm going to leave to you.
That with me. I'm going to tell you. I'm going to give you such a good idea that you're going to hate me for it. But no, everyone popping in. Muskley, good morning to you. Paul, London live trading floor popping in here nice and early. Good morning. We've got Potato. We've got Andrew. We've got Andreas. Andrew saying the intro's a banger. Are we talking about the TradeDelicious or are we talking about Market Wake Up? Which one are you? I'm hoping you're talking Market Wake Up because I like the intro. But
I must admit, I do miss the you know what I mean, like
the market the morning briefing intro.
Morning, yeah,
the energy from that. Should we make a comeback? We're good.
We'll do it.
What do you guys think? Would you guys like the market wake up theme that we've got going on here, or do you miss morning briefing? I'm interested. Andrew misses the TradeDelicious one. Okay, he misses the morning briefing one. Okay, that's interesting. Let's take it on the chin. All right, we'll take it into account. But let's talk market leftovers. I'm going to talk a little bit more about the hurricane later. I've got some fantastic images to show you, but on top of that, I've also got some incredible ways of thinking about this from a trader perspective. Natural disasters are coming more frequently. So knowing how to trade in and around natural disasters, where to position yourself, where to, as horrible as it is, where to profit from it. I'm gonna show you my game plan and how to do that a little bit later today in the big bite. For now, let's get in the market leftovers and let's talk about the coolest man in the world right now, Jerome Powell, shrugging off concerns of market downturn, shrugging off concerns of recession, saying soft landing. Who? Leave me alone. What are your thoughts on that? Meeting minutes, nothing. He's lent into that good jobs report like I have never seen anyone do before. And he's sat back, he's popped a cigar, he's put his hands behind his head, and he's gone, easy.
Completely expected it. I actually have an unreleased video on my phone I was trying to film a short yesterday about this. And I said in the short, I have a funny feeling that Jerome Powell will lean into it and take this as a massive win. And he will be like, yeah, told you there was nothing to worry about. Quite interesting to see the split of the obviously not everybody agreed on a 50 basis points cut. Everyone wanted to a lot of Fed members wanted to be a bit more on the 25 basis points side of it rather than the more aggressive 50 basis points. Obviously right now, you know, where does this put us? Well, yeah, he's kind of saying it that it's the soft landing, no landing vibe. And now we've got inflation data coming up. So yeah, this is going to be a very interesting play today with the US dollar. Obviously, the dollar's been a little bit supported recently off of that good jobs data, off of this, I guess, no landing situation. This is something we have spoken about in the past as well, that we do think the dollar was undervalued for what was going on. I think the market basically just overshot its mark. It was getting heavy on, we're going to go into the recessionary period. And, you know, although I still feel that is there, I don't think this story's, you know, gone away. But I think a lot of the markets are now thinking, okay, well, actually, this is fairly positive. You know, obviously we saw the S&P 500 break into new highs again. This is something, again, we spoke about yesterday, which is very interesting.
Yeah, I don't like it.
You don't like it, do you?
No, I don't. I've been very opinionated the past, I want to say 6 months. It's not always gone well for me, but there are a few things I've nailed. And I'll pump my own tires, right? There's a few things when I go against the crowd and I've nailed. I still think it's too early. Like, one good print. Come on. What are we doing? It's like having one Red Bull, having that coffee kind of shake, and then Googling it and finding out you got cancer. Like, it just doesn't add up, right? That's, you know, you Google anything, it's going to tell you you're ill. I think people have just jumped way ahead of what we wanted, what's really going on, and I call bullshit.
Yeah, I do too. I'm definitely on more of that feeling. I was looking at some seasonal charts yesterday, and I was looking again at our old friend 2007, and I was looking at the price.
Where's Barry? Come on, Barry.
Come on, Barry. Where are you, mate? 2007, and it's still scarily similar. It is still scarily similar.
Yeah, I mean, 2007 was the beginning of it. Yeah, we didn't feel, it's called the 2008 financial crisis, right? It began in 2007. The market downturn began in 2007. Everything was unfolding in 2007. We cut rates in 2007. Everything really hit hard 2008. We're cutting rates. We're having the market tops. We're where we sit in 2007. The financial crisis wasn't until which if we were to repeat, means it wouldn't be until mid to late 2025 when we hit it. So this is where I go back to saying, guys, we're getting ahead of ourselves. Let's not be silly here.
Yeah.
How real these problems may be, and yeah, okay, it was. I was shocked by the jobs report. A little bit better, a lot better than what I thought it was going to be. So were a lot of people, because the US dollar rallied, the stocks went up, but at the same time, so did the VIX.
Yeah.
So riddle me that one. So yeah, the surprise factor was there. The volatility index has gone up. Now, begin today. Let's get into freshly squeezed. Let's have a look at kind of what's happening, because as I mentioned, the VIX, I might as well go ahead and bring it up on the screen for everyone to see. We are pulling down a little bit. Okay, so we're sitting just under 21 right now in the VIX, as you can see here on the left side of your screen. This is the VIX. Great correlation with the VIX. Every time we go up above 20 in history, Japanese yen gets strong for like 2 weeks. How fun is that?
How fun is that? Fun. That's what that's what I've been trying to wait for.
Japanese strength has been there, but Jordan admitting he is opinionated, and the 2007 S&P in the same show. Hey, this show wouldn't be what it is if I wasn't opinionated. If I were to sit here and just...
Sorry, we should have like one of those bingo cards that people do. What we mentioned, it could be John says this is interesting.
Cross it off.
Yeah.
I don't know. It could be interesting. If I wasn't opinionated, would you watch the show? We'd just be flowing and I'm a trader. Of course, I'm going to be opinionated. I'm going to share what my opinion is. That's what you're here for, right? Well, I think that's what you're here for. It's what I'm here to do. I'm here to share my opinion. But look, let's get through where pricing's at. Aussie dollar finding a bit of an uptick today, up 0.25%. Euro unchanged. Pound up 1% at 0.1%. Sorry. US dollar CAD up 0.1%. US dollar Japanese yen down 0.25%. The XJO stock market indices down today. The XJO is down 0.4%. The DAX is down 0.5%. The Nikkei is down 1.24%. The FTSE is down 0.3%, and the S&P 500 down 0.1% in pre-market. Coffee's up 0.5%. Gold's up 0.4%. Nat gas pretty much flat. Silver up 0.3%. Sugar down 0.3%. Oil down 0.4%. Bitcoin up 0.5%. Ethereum up 1.1%. There's your quick synopsis of everything happening in the charts. Bonds relatively unchanged because there's no been big shocks. Where the big shocks are coming in are a little bit later today, when we have core CPI and unemployment claims coming out. You know what's going to be interesting? The unemployment rate downticks. The non-farm payrolls upticks in the way that the surprise that we do, but so does unemployment claims. That is going to be fascinating to me, and that is a scenario it's a scenario that's actually forecasted.
Yeah, which is not uncommon, I guess.
No.
But
with such a surprise.
Yeah. It's... What is the data at the moment? We've talked about this. It's wild to see an uptick or a downtick that we saw as well in unemployment rate, which is something that the Fed expected to rise. You're thinking, let's be fair. The Fed get it wrong all the time, right? It's very hard because you look at how the data is going to impact what goes on in sort of the inflation rate and who control. Well, it's not the inflation rate, sorry, the interest rate. Who controls the interest rate? It's the Federal Reserve. So you want to listen to what they're saying, but you also need to take it with a pinch of salt because they rarely, and they rarely get it right. So it's a situation right now where we've got to look at the data and see what it's telling us. To me, it still paints a bit of a confusing picture. There's something that's not, I feel, lining up, like we've talked about with the VIX rising and not really seeing that reflected across assets. So, yeah, it's interesting data. I think the CPI is obviously going to throw in a big spanner into this. What happens if we do see CPI come in a lot lower? Is that just going to be like, okay, yeah, this is definitely no landing now. we're just gonna spike up on higher. So it's going to be very interesting to see how this one plays out.
Yeah. Any bold predictions?
I think it's going to go higher.
Unemployment claims. or
sorry,
CPI?
CPI. I think CPI is going to come in a little bit hotter. We've seen a little bit of a rise in oil prices. I've actually got a very interesting chart to show you as well, which is the seasonal chart. We love seasonals on this channel, and I was looking at the seasonal chart of the CPI and producer price index, so CPI and PPI, and we can see that that's tracking quite nicely in line with the 20-year average. You can see the 2023 was a lot higher, but still kind of tracking within that sort of zone there. So we could expect a little bit of upside coming into September's figures. I also looked at the consumer price index, less food and energy. And typically we can see a little bit of more of an uptick in sort of September, October. So that kind of coincides with what we're seeing in oil pricing as well. We're seeing oil prices move a little bit higher. Typically when we do see that, it doesn't necessarily it's going to be reflected in this report, but could be reflected in the next report that we get. If we do see that sustained oil prices or oil prices staying higher for a little longer while, it's going to be impacting that inflation data, and we're probably going to see a little bit of an uptick. So inflation's still interesting because is this going to reignite inflation now? That is the question that is being kind of floated around everywhere. The question before was trying to prevent deflation, and that has gone away very quickly. That question was around for about a week, and then it's completely switched, and it's now actually is this going to spark inflation again? And if that's the case, what do we see when inflation rises? Well, we actually see interest rates go higher. I saw someone bold prediction yesterday that the US 10-year yields could break 5% and move a lot higher, which I thought was quite interesting concept to look at. And if that does, what does that spell for the US dollar? That's a strong US dollar. And
I mean, yeah. So, I mean, that's a bold statement. For recession's sake, I hope he's wrong. We have seen an incredible uptick in the 10-year yields, which usually the higher the longer term yields, the more scared people are of the future. All right, that's essentially how it works. The lower those yields, the more safe they feel. So to have the US 10-year yields spiking in the way that they have the past few days and heading up to that 5% is a little bit of concern. It means essentially people think in 10 years' time that it's not going to be as fun. It is going to be a little bit tougher. So it is a bold statement. It's not one I'd stand by, and it's one that I hope he's wrong. But I mean, anything. 2024 has been a year, so who's to say where? And see what happens. Let's get into hurricane talk. And I know that doesn't sound very exciting, and I shouldn't be excited.
It is to me,
but all right. Nevertheless, I want to kind of give you guys a bit of an understanding in how I view this opportunity. So I'm taking off my human hat. All right, all emotions aside, right? We know this is a tough time for a lot of people, millions people being affected by this. I am taking off my human hat, so please, that's your disclaimer. Please note that this is just my opinion from a trader. I'm putting on my trader hat, taking off my human, putting on a trader. Okay, so we're removing the emotion. I'm going to share a couple of photos that I found really, really interesting from what's kind of unraveled from this before we dive in, just because I think they are fascinating images. Arguably, this one might be my favorite. Okay, I'm going to switch to it now. Old mate does not care. He's out there to catch a fish, and that might be one of my all-time favorite ones. He's wearing shorts, he's got slides on, and he's out there with a sea fishing rod, might I add. Just phenomenal. But you can see the severity of the storm that has hit. The visibility is obviously quite low. This buggy thinks it's gone off-road, it's got bogged, and you can see that the damage essentially that's going through. Another interesting photo for me was all the cancelled flights, right? This is how I'm now starting to coach you into thinking, okay, economically, what effect does this have, right? That's an image that really depicts that picture, which I find quite fascinating. Staying on that theme, okay, the queues to get fuel, phenomenal across the whole state. A lot of people stockpiling, a lot of people need to get this because if power goes out, you can see there's a truck here that is actually a line repair truck to repair power lines and things like that. So you can see how much they expect and how much they're going to need to rely on different things like fuel. We're still along that path of kind of economics. And while I'm sitting there talking about the line repair truck that you can see, I've also seen this photo, which I think is incredible, of all the hundreds of line workers ready to try and get power back. Okay, so I've gone from the photos of the clear fishing mayhem that we see from this hurricane, but starting to coach you guys into, okay, how does this affect markets, economy, and how do we manage risk around that and or profit from that? That's not a very nice thing to say, but I've said it anyway, and I'm going to run with it because you guys know me now as a trader, and I'm sharing this as a trader. Okay, where do we best position ourselves in a situation like this? I've got four categories that I want to share with you. So let's jump back on the charts. The first category I want to get through is insurance companies. That's a pretty obvious one. You've just talked about cat bonds. All right. Insurance companies are a really interesting one. I'm going to give you three, right? Allstate Corporation, publicly listed, Progressive Corp, publicly listed, and the Travelers Company, which is situated in Florida.
Yeah.
Listed. Now, all three of these companies were around during Hurricane Irma in 2017. So the good thing about this is we can actually have a look at historically what happened and how they performed in and around these. Now, genuinely, when it comes to something like such a big destructive natural disaster, caused a lot of damage, a lot of insurance claims, like billions and billions of dollars of insurance claims. With cat bonds in mind, and I like that you've actually brought that forward today, most people short insurance companies when something like this hits. You can see already the past couple of days of the trading days here on Allstate Corporation, it has been felt across Progressive and the Travelers Company as well. We have seen between a 5 to 8% drop, some of them all the way down to 12%, right? 2017 seen the exact same. The day the hurricane was hitting, we saw incredible drops, the Sphere. All of them completely recovered within 3 months. Some of them way quicker. And then I had a look at history across natural disasters where insurance companies have kind of been there. Very common theme. So category one, that's not a phrasing I should use. Group one for talking about where we can position ourselves or where we need to be wary of is a short term, and I'm talking very short term downfall in insurance companies, arguably already happened, followed by a rebound over about 2 to 3 months. Could be an interesting time to get in these insurance companies on this dip, like the COVID dip, like we talked about, like we traded ourselves. This could be a really interesting time to see that.
Sorry, Jordan. It's that thing of consumers would be like, okay, we've gone through this. We didn't have insurance and we're fucked, basically.
Yeah, we need it.
Now we need it. So you get, there's like a huge influx.
It's a marketing campaign for insurance. Yeah. It is a huge marketing campaign for insurance companies. Conspiracy theory. I will not be surprised if you see massive budget spending in advertising for insurance companies now from this in and around Florida, because if you've gone through this and you don't have insurance and you've had to go out of pocket to repair everything, and then you see an insurance ad that, hey, it's just $50 a month, we would have paid for everything, there's a good chance that you're going to be inclined to do that after that pain, and vice versa. So insurance companies by the dip type play could be really interesting. Group two I want to head into is infrastructure. All right, we've talked about this right here, this picture, which I find fascinating. Now, this is an interesting one. This is a thinker. Natural disasters, storms of this nature are a really good opportunity for infrastructure. And what I mean by that is a natural disaster will go through and rip out all your old infrastructure, which you can now replace with new infrastructure. You can upgrade your whole system quickly and with insurance cheaper than what you would if you were to rip it up and upgrade it all yourself. Normally, big energy companies, big infrastructure companies will use an opportunity like this to put in new tools. They're not going to go to a 30-year-old property or road that's been ripped up and put 30-year-old infrastructure underneath. They're going to upgrade the line. They're going to upgrade whatever it needs to be to new standards that are either set by government or just new technology that has been found. That usually sees an incredible buying opportunity. I'm talking 2, 3, 4 years into the future here. They'll invest heavily. I think we will get a dip. The one that I'm talking about in particular is NE, or next era energy. You will tend to see a dip. I mean, all their infrastructure is going to be ripped up. You're going to have people hating on them for the next probably month while a lot of people have no power. Millions without power right now. They're going to cop a lot of PR stick. But they are going to be able to upgrade their infrastructure incredibly over the next few months. And then into the future could be a really interesting investment. The next one's a very simple one, somewhere everyone will look. Good old Home Depot. All right, something like Home Depot, it's going to be a big repair job. You've seen the damage. I mean, some of the photos that we're looking at here, you can see some of the damage to the properties. Really, everyone's going down to Home Depot to buy a hammer, to buy nails, to buy something to repair their properties, aiming for a 3, 5, 6% kind of uptick in companies like Lowe's, companies like Home Depot over the next few months. You can already see the absolute rally we've had into this hurricane. And now that it's hit, you see a little bit of a gap up and a little bit of a sell-off, but I still think those profit margins will come in. Earnings aren't until mid-November, but I think it'll be the next earnings after that where you really feel that money come through when looking at Home Depot. And then the final one is the fun one. The fun one. Yesterday, I told you 51% of all oranges of America are in Florida. Citrus fruit, one of the biggest exporters. Well, they don't really export out of state export. Florida is massive on citrus fruit. Now, when we had Hurricane Irma in 2017 hit, orange juice futures, yes, for you commodity traders, yes, for you currency traders, orange juice futures are a thing. I think they're OR1. No, they're not OR1. Let me. What are they? OJ. There you go. I should have known that. OJ1, exclamation part. Yes, orange juice futures are a thing. Florida, massive producer of citrus fruits. Now, what's really interesting about this is, in my mind, I'm thinking, okay, we're going to wipe out all the farms and the wind and the trees and everything's going to be ripped up. So orange juice is probably going to get hurt. Citrus fruit is probably going to get hurt a little bit. Harvesting season just ended, right? Which means most of the harvest is already done, already shipped, already gone. And that's why I think you're not seeing too much kind of happen when it comes to orange juice futures. A lot of the stuff's already happened. I'm questioning whether or not it's going to have an effect on next year's harvest. If a lot of trees and whatnot have been gone and the farms have cost all the money and time to repair, is it next harvest that's going to hurt potentially? Regardless of the fact, orange juice futures are actually seasonally strong right now, up until December, as commodities tend to be. They are seasonally strong. And I used your friend's application there when I was having a look at orange juice futures, right, to see what was going on. Markets made clear. And you know what really, really, really surprised me? And I was just like, wow, we've gone full circle. I've just also realized I didn't change the big bite. We've been in big bite the whole time. But you know what really, really surprised me?
What surprised you?
The correlations
at the bottom.
Progressive Cooperation, which is one of the insurance companies that I just mentioned. Progressive, PGR listed, an 88% correlation with that same insurance company from Florida.
That's wild.
That is nuts. I read orange juice, the last one on my list. I pulled it up and I saw that and I was like, Progressive Cooperation. I was like, I looked at my notes. It's in it. It was part of this. I was like, what are the odds of that? But Progressive Cooperation, that one of those insurance plays, correlating heavily with orange juice. You can see October right the way through, we do tend to get a little bit stronger. We have been correlating reasonably well. There's a couple of, blimps, shall we say, or volatility that isn't overly standard, but I found that so fascinating that orange juice futures just happen to have this 88% positive correlation with Progressive Corporations, who's one of the insurance companies I would want to buy into later in the year. But look, there's your run through on Hurricane Milton. I've been looking at so many different hurricanes today.
You got like Ian and
I've been looking at correlations and everything. Yes, Hurricane Milton, there's a synopsis of what's happening down there, but also as an investor and as a trader, where I would be looking to position myself for both opportunity and for risk management purposes.
I absolutely love that. That is something that really fascinates me. You know, I'm a big geography nerd as well, so that to me is really interesting, because they do have now like sections of hedge funds to do with what's going on with natural disasters and weather and things like that, and all renewable energies and stuff. So it's an interesting take. I like it. I like it a lot. The orange juice bit there was interesting. Obviously, I am more commodity currency base, so orange juice would be where I look more towards. But yeah, going over to like Home Depot and stuff, that does make a lot of sense. So yeah, I really enjoyed that. Barry did say as well, there was a Home Depot has a seasonal play as well, so that's quite interesting to see.
Yeah, and that's something we can have a look into, but I hope I was a little bit thought-provoking today. Remember, everything that does happen in the real world, and I say that, when we trade macro, it's what we trade. When you see news and things are happening, that is what we do here at Market Wake Up. A little bit different from your technical traders. We care. We care about that stuff because it affects the price markets, it affects the different assets, and we want to help you guide your portfolio into the right places at the right time and break down the macro mumbo jumbo into something digestible and easy. And that's what we do here on Market Wake Up, guys. We have run a little bit over time. We've run into, it's Will's birthday. So if you're heading over to London live trading floor today, make sure you say good day to Will and say a big happy birthday. But we're going to be back tomorrow, 8:30 a.m. British Standard Time. If you did enjoy it, hit the like, share it with a friend, and we'll see you tomorrow morning to do it all over again. Take care, guys.
Peace.